The three names with the largest Turkish exposure would be BNP Paribas of France, UniCredit in Italy, and BBVA in Spain. And in all three cases, the exposure comes from a local joint venture with a Turkish banking partner. And in terms of size, I would say the least exposed of the big three would be BNP. You're looking at about 5% of outstanding loans, maybe around 10% of net income. I would say the most exposed is BBVA, where you double these figures, so about 10% of loans, and last year about 25% of the net income was attributable to Turkey. UniCredit is harder to guess because they use a different accounting method to report a Turkish investment, but I would say about half of the dividend payment from the UniCredit common stock comes from Turkish cash flow.
Now, just walk through the permutations here, because, of course, the big thing that everybody worries about is the idea of contagion. Is this something where you think this is literally, I don't want to say ring fence, because I don't think there's any ring fence around these three banks? How damaging is it to these banks? How damaging is it to the counterparties of the banks?
Well, and that's why it's important to understand that that exposure happens through a local Turkish bank in which these banks have an investment. So let's say things keep getting worse, the Turkish lira goes all the way to 10 against the dollar, the big mess continues, they can just walk away. They can write off their investment, give the keys to the bank to the Turkish central bank, and let them deal with the mess. So of course they would have to take a big write-off, that won't be pleasant, but there is limited liability even in the worst case scenario.
So it sounds like you're not that worried.
No, I mean, I think a lot of it is baked already in the valuation of these banks. I mean, these are banks that are trading for between 0.5 times book to 1, so you already have a bad scenario priced in. In the case of BNP Paribas, I mean, you're actually talking about the most financially safe, sound bank in Europe. It's kind of the JP Morgan of Europe. You're talking about somewhat of a peripheral market. I mean, for BNP, Turkey is probably the fourth or the fifth most important market. If you think of BBVA, I mean, Mexico matters a lot more than Turkey. So it is going to be bad for the banks themselves. It's bad for the Turkish economy, but I can't think of it as a Lehman Brothers for the entire global economy at this point.